Should I operate as a sole trader or a limited company? This is an easy one because it depends. It's not really something you can cover off in a video because it is truly unique. What I typically say is if profits are over £50,000, then probably better off from a tax point of view as a limited company, because if you're a sole trader and your profits are over £50,000, you're going to enter a higher rate tax, and there's not a lot you can do about it. If you've got a limited company, you can be a bit flexible, like push it into the next tax year. You can retain that in the limited company, the excess, to grow the business. So there's a bit of a difference there. Again, though, it does depend, because the tax saving isn't as good as it once was. And if you're just tipping over £50,000, you're not going to save all that much in tax, and accountancy fees for limited companies are going to be a lot more expensive than what you'd pay as a sole trader, to be honest. Although with a sole trader, we've now got making tax digital for income tax, so you've got a bit more compliance there with making submissions quarterly. If your business, obviously a limited company gives more protection. The limited company is essentially a separate entity. So if anything happens to that limited company, if it gets sued, the limited company is the one that takes the fall for it, not you personally. So that is always worth considering. But again, there's an extra price in the admin, the accountancy fees for limited companies. So it really does depend. What I say, if you're starting out a business, speak to an accountant. They will typically give you a free consultation and go through things with you and look at your own circumstances, which are more important, because if you are a sole trader but you've got a spouse, you could turn that into a partnership, you could pay a salary to your spouse to bring your profits below that higher rate tax threshold. So one of them, it depends.